Hey, good morning, everyone. Welcome back to the RationalInvestor.com's Daily Brief. Woohoo, party! Happy Friday, TGIF, and all that, I think. And the irony of it all is I've just been hip deep working with the bureaucrats for Liam, so I'm totally discombobulated. I didn't even know what day it was yesterday. And maybe I've got a little bit of autism too, because I love routine. I love everything nice and structured and stuff. And having to run around the city trying to hook up with these bureaucrats, my head's sort of in the clouds right now. But good morning, everybody. Welcome back to the broadcast. And we got, I think, a pretty good offering here for you today. Mr. Bear is going to try and school us up on the Fed and their quantitative tightening and the Treasury's ongoing balance sheet. Ay, caramba. But it's always educational, and I think he's got a pretty good head around this, so it helps us understand the market a little bit better. I think as we're sort of seeing, with the market itself has caught a bit of a bid, and we're working our way higher. And I'm seeing a lot of money flowing back into the crypto space. Ironically enough, CNBC comes out with a short call, so we should probably be looking for higher prices anyway. And of course, we have wonderful fundamental events like Constantinople coming up shortly in the near term. So we've got lots of action in the market. Things are up and down. Brian's taking profits on stocks. Taking a look at jewelry names, always fishing for new ideas to put capital to work. So we've got a pretty full slate here for you today. Probably a good idea for us to start off with some introductions. Of course, as always, we've got the mayor of Vienna driving the bus. How you doing this morning, Alex?
I'm doing pretty good, Brian. Hope you too.
Excellent, thank you. And I hope your loved ones had okay doctor's appointments and everything went okay there. And I guess, are you settled back into Austrian life now? Did you remember how to speak German?
Yeah, barely, but I'm getting accustomed to it again, I guess.
Well, that's cool. What's the weather like there? It's actually snowing again here in Vancouver. This is ridiculous. I'm going to call my lawyer. What's the weather like in Vienna these days?
I think we're reaching springtime, yeah.
Oh, that's good. Springtime for...
Yeah.
Don't do it.
Springtime for crypto
Right,
and
yeah.
Bitcoin and semiconductor stocks. Anyway, good to see we've got Mr. Mayor driving the bus, and the great part about having him here is he keeps me focused and in line. So need a little bit of structure. Thank you very much, sir. You're doing a great job. And of course, Zach is reporting that it's just another goddamn day in paradise for him over in Hawaii. You bastard. But anyway, our plan is to relocate to Hawaii at some point down the road. So if anything, Zach's giving me incentive. And a special treat this morning. We did have a abbreviated Julian report yesterday. He does Thursdays, but Friday, we've got the bear in the house. How you doing this morning, Mr. Bear?
I'm good. I've sold everything. I closed all my shorts and went long because CNBC is short.
Yeah. And that Ethereum, the thing just doesn't want to break down, eh? So if anything, that's encouraging to see. But anyway, glad to hear that you're doing well. Looks like we got a pretty full room here this morning, so lots of attentive peeps. And if you do have a question or something as we're sort of talking away, hey, Jamie, nice to see you, Slick. Feel free to ask. Always a good idea. Throw yourself on mute. Just maybe type your question in or something along those lines. When we do have Thomas here, he's just a world of information and world of thoughts. And actually, half of my job is just to shut up and just let the Thomas loose. So, Mr. Bear, where do you feel like starting our adventure today?
Oh boy, where do we start? We've got data coming out of Europe that's kind of all over the place. Yesterday we saw lots of reports that things were weak, and then you've got talk about central banks starting up their what do they call it, IROP program or whatever the hell it is, where basically the central bank will push more money into failing banks throughout Europe. So that would mean prime candidates for that are Italy and potentially France. They're just going to pump as much money as they can back into those banks to prevent them from failing. And unfortunately, or fortunately, that seems to be the global trend here, is when things look bad and you are up for paying off your loans, and if you can't afford to pay them, well, the central bank will just give you more money to pay off that loan to pay it later. And that's just the way these things work. And I think that's kind of this risk-off situation that may be entering the market, and that's why we saw gold sort of lose a little bit of its lunch, but it's rebounding a little bit today. We're seeing things like the dollar also responding to that information. I think today we're seeing a little bit of a down day, so we're down like 1/10 of a point, but still trying to figure out which direction. And to me, the fact that we're not breaking below this neckline here, this is a sideways consolidation. And I think the next target is sort of this 98 to 99 number here on the dollar. 98 is a 200% extension from this range here. I don't know how good it is to use that as a point, but nonetheless, I think that dollar bull talk is still very much on the table. So with all of this kind of craziness going on, we're seeing stocks down yesterday, we're seeing them up today. You've heard me talk about this this market huddle podcast thing, and I was talking about things like the Treasury's general account. If you haven't watched this, and you're into the stock market, this is definitely something you got to watch. I mean, this is probably the most fascinating thing that I've seen presented in the last 6 months, really. This data is research that no one is really doing right now, and it's people paying attention to things that it's just this one guy. The guy's name is Barton Options, and he doesn't disclose his real name. That's his Twitter handle. He does all this analysis on basically the bond market and the Treasury's general account. So he starts off by talking about the equity market here, and he's kind of correlating that at the beginning of the month, you've got sort of these upticks in the market. And then as the Treasury is sort of doing their balance sheet operations, or in these cases, they're doing their quantitative tightening cycles. These happen in 4 periods throughout the year, and that would be, I believe, they're February here. You've also got May, August, and in November, and you're seeing things like big Treasury net issuances, how much the Fed is taking in, mortgage-backed security roll-offs, bond purchases, coupon roll-offs, all this complicated stuff. You got to listen to the podcast to get it, because I could talk about it for almost an hour, and this guy only talks about it for 45 minutes. But to get a basic overview, he talks about this Treasury general account. Now, that's things that, the Treasury, it's basically their checkbook, right? So if the Treasury needs to do business, they write checks out of this account, or they're basically doing bond purchases, they're issuing coupon payments out of that account. That account is $375 billion. And over the last couple of years, that account has moved in the hundreds of billions of dollars. So right after Trump was elected, this is, the sort of a screenshot of the Treasury general account here. You can get this chart at fred.stlouisfed.org/series, and the name of that chart is the WTRE Gen. And this is kind of a more interactive version of that chart, but you can see that right after Trump was elected, Mnuchin was like, why is this account so big? We don't really need it this high, because eventually, really what happened here was the Obama administration was like, hey, we need this account high because of the debt ceiling, and we need to keep this at this level just in case we hit that ceiling. Well, Mnuchin's like, well, we don't have those issues anymore, so we can roll this back down. And in the course of like 3 months, not even, it was like 2 months, this thing went from $420 billion all the way down to 38 billion. And the way that this account works is when they're rolling this account down, what happens is that money goes from the Treasury general account into this commercial bank reserves. Now, when the banks get this money, it pretty much allows them to inject that liquidity into the system. So you see the market rally. It's almost like a quantitative easing, if you want to think of it that way. all this money suddenly enters into the system. Now, what happens when they start to grow this account is money comes out of the commercial bank reserves and back into the Treasury's general account. And that sort of is like a tightening event. And that sort of sucks liquidity out. That makes the markets a little less likely to be on their way up. You're seeing like markets sort of stutter around. They're not as happy as they were. And you can see that sort of oscillation here as we've entered into 2008, as this account started growing. I mean, what happened with the S&P and the wider equity markets? They started, they weren't accelerating the upside as much as they were in previous years. You saw this kind of stuttery action. And then, of course, as this account peaks, this actually peaked in January, but as this was going up, you saw sort of things like, the Christmas Eve massacre. You saw big sell-offs happening in the market. This is a really crazy number, and this thing is oscillating by hundreds of billions of dollars, whereas the Federal Reserve is like, well, we're going to be doing quantitative tightening programs where that's going to really be tightening in like $38 billion or so over the course of a couple months. I believe it's a quarter or maybe it's monthly, but $38 billion worth of tightening is peanuts compared to this account, which is going up and down in the hundreds of billions of dollars and affecting liquidity. So what's happening now is really the question is that, well, Mnuchin's come out and said, we want to reduce this balance. We want to bring this account back down. So the idea is that that's going to be the liquidity that you're seeing injected back into the commercial bank reserves, who theoretically should be, giving out that money or making things a little looser when it comes to interbank lending, liquidity injections into the market, et cetera, et cetera. So with that in mind, that's kind of this idea that as that account's going down, we're going to see in the coming months, thank you, Jamie, for linking that chart. You're going to see the market sort of still have some legs to the upside. And I think this is something that a lot of people did not understand, didn't anticipate. And when economists were they were given this information and question, what do you think about this? They were kind of all over the place. There was a lot of debate as to whether or not this directly is impacting the market. But I think that this guy's research and the way he's presenting how this works, I think there's a clear correlation here. And what's happening is with this quantitative tightening action is that it's not enough money to make a big difference to suck out of the market when you have this Treasury general account really fueling this market. And I'm almost wondering, like, does the Fed chief, does Powell, is this his game sort of? Like, yeah, we're tightening, but at the same time, he's not going to come out and say, yeah, we're going to tighten $38 billion, but we're going to decrease our Treasury general account balance by $300 billion, which makes the 10% of tightening we're doing peanuts and not really impact the market. So it's really confusing as to how this is all working in the mechanics of the market and what he's saying. So you kind of have to look at the underlying plumbing of this market. And this is what's so fascinating to me is you've got all these talking heads and Fed chair guys saying one thing, but then you look at the underlying market and the plumbing going on in the background, and it's saying something completely different. And to me, it's mind-blowing and really fascinating stuff. And I'm sure a guy like Jamie's probably like salivating all over all this kind of stuff. But nonetheless, the point of this message is that you're going to see this account decrease. And in the face of quantitative tightening, it's not going to be the event that sort of leads to recession, that's going to tip the markets over when this liquidity is being refunneled back into the market. Now, this account balance will fluctuate on its way down because you have things like this account paying out interest payments, paying out tax refunds. So evidently in the next couple of weeks, I think it's something like $50 or $60 billion worth of tax refunds are being given to the banks to pay out for their yearly taxes. And then, of course, you're also seeing these numbers will start, this account will start to go up again. So while they're trying to reduce this account balance, it's actually going to increase into April. And the reason for that is because they're receiving tax payments from institutions, the public, whoever needs to pay their taxes by April 15th, this account balance will increase despite them trying to decrease it. And to me, just seeing this fluctuate and all of the mechanics behind how this is going to go up in the face of them trying to decrease it, I think, is the real trick to understanding how these markets are going to work over the next couple of months. But I think the general theme here is they want this account balance to go back down. Therefore, theoretically, these markets should continue on their way up until something breaks, until something else happens out of this market. Again, there's a lot of people trapped short. A lot of people thought going into the end of the year, the yield curve inverted, and people were like, oh no, that's a sign of recession. Now it's sort of flattening out again.
It didn't really invert.
Right, excuse me, it almost inverted.
It's interesting, a lot of the noobs called inversion, but they really didn't know what they were talking about.
Yeah, so you're right. And then interestingly, there's this Zero Hedge article about, and Keith was actually the one that showed me this, which was really cool, is that they go on, they sort of pull this data about yield curve inversions and how over the last couple of years, or over the last, whatever, when the last time the yield curve inverted in the 80s, the last 5 inversions, I believe, since the 80s, that dip below the zero line has decreased in magnitude. Let me see if I can find this link. But essentially what's happened is this article comes out and predicts that, hey, maybe we don't actually need to go below that zero line in order for us to have this, sound the alarm signal. Maybe that was the sound of the alarm signal. And what's really happening is no one's paying attention to it. Let me see if I can find this damn thing real quickly. Option, no. I'll have to find it later. But I mean, I've ranted for a long time here. I think it's probably best that we move along from people who don't really care about this stuff, and maybe, traders want to trade, so to speak, and see if we can find some cool names to look at. Oh, I just found
I think, I don't discount yourself. This is extremely difficult information to try and absorb and digest and then be able to articulate the message. So this is time well invested for everybody here, I think.
So here's, oh good. I hope I'm articulating this because it's
anything, Alex, if you're watching this later, I think probably a good idea for us to put a little note in the daily brief summary about this this conversation here today. I think that would be really positive.
Good, and that way people can skip it if they don't want to hear it. But I mean, here's this graph.
Yeah.
Here's this.
You're as bad as me for self-deprecating. This is great stuff.
Well, good. I'm glad you're enjoying it. The last thing that I'll just cover is this article I was just mentioning, is that they have this yield curve max inversion point, and you can see each time the yield curve sort of hit these points here, it's increased in the how do you say this mathematically? So basically in May of 1980, the yield curve max inversion reached negative 2.14. And every time after we've gone under that zero line, these values are closer and closer to zero. So this article argues that maybe we don't actually need to go below that zero line to signal that there is a recession coming, and that maybe we've already gotten our warning, is sort of that warning system they're having, and that the reason for that has to do with debt to GDP, and we're at historical levels of debt, and GDP hasn't caught up to these things, and yada yada yada. It's all macro stuff that for me is fascinating and so hard to wrap my mind around all this stuff. It's like almost going through med school again. This is how thick and academic this crap is, but I mean, to me, it's just it's grabbed my interest here. So hopefully, as I start to understand this stuff a little more, I can explain it better to everyone. So I hope this sort of gave you a window into the underlying plumbing of what's going on into these markets, and what Fed chiefs are saying and what talking heads are not saying about this stuff is that, hey, this is actually happening behind the scenes, and no one's really acknowledging it except for very few people. And I think that usually those few people that do find this information, they're the ones that end up profiting a lot. They're the ones that figure out things like, in 2008, like what The Big Short was based on, where that guy, saw those toxic mortgages and he took out all those put positions. He had to go to Goldman Sachs just to get, the product written for him. And the time that those products were written for actually expired, and he ended up losing money, but making it in the end. And that's the kind of stuff that I think is happening here, is people are starting to discover that, there's new means to the mechanical operations of these markets behind the scenes. And if you can identify them and time it properly, I mean, there's a lot of money to be made. I mean, if you can just see from this one chart here that he has, the beginning of the month, markets are rallying. And at the end of the month, where is this chart? They're on their way down. And I think that's really cool information to see. Now, I mean, to trade from that is dangerous, because if you're not understanding why these markets are rallying at the beginning of the month and why at the end of the month, why the Treasury is undergoing their sort of, market operation or their balance sheet operations and their QT program, then you can sort of almost predict that, hey, this next week or so could potentially be a downside event in the market. But if the Treasury is decreasing their general account, maybe that offsets what's happening and this bucks the trend. But you can see, this continued to happen from February into August, stopped happening sort of in this, maybe it did happen, he just doesn't highlight it there. But nonetheless, it's interesting information to use sort of to frame your trades around. So I think I'm done with my rant there. And I'd like for you, Brian, to kind of talk about some of the cool stuff that you're seeing in the market as far as, specific stock names, because I think there's a lot of cool stuff going on, from, Heinz being downgraded or at least them missing earnings, and, things like Warren Buffett talk and whether or not he's going to be able to bail them out. And
okay, well, let's go slowly. We'll go one by one here.
Okay. All right, word vomit.
I mean, the problem here is, when I look at the market, is it's awfully difficult for us to get too excited on the long side. Unfortunately, we basically had the market do all the dead cat bounces. And if anything, I think this chart really speaks a lot, where I took some time and I highlighted all the gaps that needed filling on the upside. And you can see gap fill, gap fill, gap fill, gap fill. So we're going through the process of cleaning this chart up. And what I'm hearing out of a lot of the sort of public speak is, oh, wait, we're within 1,000 points of the new highs, right? So people are already assuming that we're heading up there. I don't know. I mean, the Dow super cycle guys were kind of looking for this massive rolling top and basically tests of these highs and then failure. And, we're getting closer and closer to the Ides of March and Japanese fiscal year end and all that. So, we look at interestingly enough, very rarely does RSI actually, out of the box RSI, 14-period RSI, very rarely does it actually ever get to overbought and oversold readings. So the fact that the RSI itself is up in this overbought neighborhood, it's got to be a bit of a warning sign. For the level 3ers, they just did sector rotation. And, it's probably worth us just taking a quick boo at what sectors should have done well and what sectors we should have been expecting to underperform. So here is the first 2 weeks of January 2019. And, we sort of talked about this before briefly here for Daily Brief people, but long and short of it here is, this is just where the fund managers are putting their money. It doesn't necessarily mean it's guaranteed, but, they're the smart money. And generally it's a good idea for us just to listen and see where they're putting their money. We had a bit of a debate in the class group tutorial session on Wednesday as to whether this real estate proxy here was accurate. I did post, there was one REIT that just knocked the cover off the ball in earnings and the stock went up, but I've seen a couple REITs that have underperformed and they're getting knocked back down. But the long and short of it here is it feels like we're sort of at this part of the cycle, maybe somewhere in here. And we should probably show you the full economic cycle picture too. So, if the fund managers think they're piling money into financials, real estate, consumer discretionary, there's that consumer services, sort of tech related, where does that sort of put us on the economic cycle, and it's feeling like we're sort of in kind of this neighborhood, or maybe early this neighborhood, something along those lines. And it's just interesting how things like consumer staples. This is not the friendly part of the market for this sector. And so as a result, we saw things like, Kraft Foods just get destroyed here, which is a pretty typical example of consumer staples. If there's a recession, people still have to buy their Kraft Dinner and all the various different products that they sell. But maybe we're not seeing that anymore. And actually, it was just interesting. While Thomas was chit-chatting away there, I happened to pull up some internals. TradingViews kind of messed with their symbol guide here, so I had to change a couple things. So anybody who's doing bread studies, this is actually a really great example of new 52-week high and new 52-week lows as sort of a nice little sentiment indicator. What do you think? Where's Colleen? Where's that Colleen? Can you see any letters of the alphabet down there, Colleen? So, big ass W with the broader market just totally in the tanker. And that was that Christmas event. And then more importantly for us is, we don't buy the panic dump, but we want to watch how the market acts following that event. You can see, based on just stocks making new 52-week highs, making new 52-week lows, if we break this down, I thought I had this on here, but I guess I don't. This number of stocks that were making new 52-week lows was just exploding. And of course, the number of stocks making new 52-week highs was basically zero. And then that quickly reversed. The number of stocks making new 52-week lows started to trail off dramatically, and stocks starting to make new 52-week highs started to break out. And so this relationship started to work its way back. One might argue that we were sort of thinking, okay, well, we came back to the zero line, sort of net neutral. Could we roll over here? And the market went through a consolidation period, said, nope, we're still feeling pretty good. And then we, use other sort of measuring tools that we've been talking about here recently to measure the strength or weakness of the broader market. This is the Dow Industrials, the sort of, the big blue chip stocks versus the Russell 2000, all this little piece of craps that we love to trade that, they don't have necessarily solid earning streams. They're still maybe venture cap oriented. Maybe their earnings are in question. Maybe they don't even have any earnings, right? And it's just, we think we'll build a better mousetrap, and so we're going to go raise a bunch of money to try and build that better mousetrap. But sometimes it just doesn't pan out, right? And really, you could argue there's a lot of similarities between sort of that Bitcoin, maybe Litecoin, Ethereum, right? All the sort of senior crypto names, and then all the little pieces of crap that we like to bang out doubles on. That maybe their story's a little suspect, but I've noticed that it's happening in crypto as well. So, there was a gentleman, I put out his YouTube video, very enthusiastic guy, trader dude. Think he got the market completely wrong there, but that's another conversation altogether. But he had a really interesting take, and a lot of people want to believe that crypto isn't correlated with the stock market, doesn't move in the same vein as the stock market. And I would actually argue that crypto is a risk asset, just like commodities. And so as a result, the correlation with the stock market should actually be pretty high. And so we can actually make a lot of comparisons with this sort of proxy of junior stocks feeling a lot better versus senior stocks, and what we're seeing in the crypto space right now. I think there's a lot of similarities. But anyway, the point of the matter here is that this is still trending towards risk, towards speculative fervor. And as long as this trend continues, like you can see, we tried to W here, and through this event, I was kind of like, I don't know, guys, let's see what happens here. But boom, another M comes in and down we go. stock market's feeling pretty happy. And so that's sort of, actually, I think that correlates actually pretty well with the new highs, new lows, and that idea that the stock market's still catching a bid here. And if I understand Thomas's comments here correctly, we actually have a situation where the market and the banks are getting injections of liquidity, and they got to go put that money to work. Now, does that mean that they actually go out and initiate a whole bunch of new loans? It could be. Do they actually, hey, keep in mind that companies have accounts at these banks, and, a lot of the big blue chip companies, their bank accounts are probably pretty big. Does that give them the opportunity to go and buy more stock back? Because that seems to be the end vogue through the end of sort of this fear cycle. Companies aren't ready to invest in new ideas. They're still sort of consolidating, cleaning up their balance sheet. A lot of people bitch and complain about how, these companies got a whole bunch of tax breaks, and what do they do with their money? They go and they just buy their stock back. And how is that fair to the working public? Well, the trickle-down economics theory is if the companies are, have stronger balance sheets, or stock prices are going up, then that means that they're more inclined to think about doing new business and opening up new plants and new sort of ventures, if you will. And that sort of trickles down to the working class. They hire more workers, that kind of stuff. But it takes time. And then also, too, you have this overriding sort of problem in the market right now with regard to sort of the economy really expanding in earnest. And that, of course, is everybody's sort of, oh, my God, what's going on with these trade wars? It was interesting. Zach actually found a Chinese stock that we were interested in for TRISOF. And I'm kind of like, oh, Jesus, do we want to go back into China? Do we dare go into China? But I am hearing, and I'm seeing lots of rants on Twitter and stuff about how the Chinese names are starting to come back. And that leads me to believe that we're getting closer to the end of this sort of trade war issue, that there is some sort of end game in the sights for, maybe there is the potential that we might have one of these sort of by the rumor. Mr. Trump's heading, of all places for him to go, I found it fascinating. He's actually going to Vietnam. I thought that was a really interesting choice of location of all places to do this, right? But anyway, we might be seeing sort of markets getting bid up on anticipation of maybe some good news might actually develop. The Chinese said, well, we're not going to participate in this conversation you're having with Northern Korea in Vietnam, and they walked away. But you never know. We might get a surprise. And the Chinese are notorious for that. So maybe the market to a certain degree is catching a bit of a bid on it. Hope, anticipation, optimism of something positive coming out of this event. So be cognizant of the fact that this might be a buy the rumor, sell the news kind of scenario with things like the broader stock market. When is that conference? Isn't it? Is it this weekend or is it next weekend? I guess it's got to be this weekend, eh? So it feels to me like the market's getting bid up into this event. So now, with that said, Brian's constantly shopping for new ideas. It doesn't necessarily mean I'm going to pull the trigger, but I've always got my ears open. I thought it was interesting. My TRISOF. What are we going to call you, Zach? We're going to call you. I don't know whether we're ready to call you Guru yet or not. But he's doing very good at hunting these ideas. He found a bunch of the ideas that you guys have all prospered off of. Secret Master. All right, we'll call him the Secret Master. That's right. So, yeah, I'm not going to tell you what the words mean, but from now on, Zach is officially TRICCDO. Oh, that's good. Good memory, dude. So from now on, Zach's official name at TRI is CCDO. That's great. This is another one that he stumbled upon yesterday, which, frankly speaking, the guys he's putting in the time and the effort to hunt for these ideas, and I think he's doing a great job. Just simple 52-week ranges, and the irony of it all is when we pop over to crypto, if I don't talk too much here, when we pop over to crypto, you're going to see a whole bunch of crypto names look exactly like this. So really, it's just rinse and repeat. It just, what market is it that we're interested in. But you can see this name. It's a pharma name. And it turns out these guys actually went and bought another company so they might actually even be sort of moving away from the pharmaceutical industry per se and into the data management industry. Who knows? Only time will tell. But nonetheless, really interesting technical idea. You can see this juicy gap sitting up here at about $5-6. 50% rule of the 52-week range is over $9. Holy Jesus. So these $4 calls for August. August we're right on the cusp of acceptability here for trade ideas. So if you wanted to let this breathe a little bit, maybe wait for an October or November series to come out, totally fine. And also too, these options are fairly illiquid, so please understand what it is you're getting into. But out there shopping, hopefully everybody can see the cute little W's that are trying to come in down here on that merger news. And this is definitely a one that I really wouldn't have a problem if we just worked a stink bid, maybe 20, 30 cents. I think I saw on the open this morning, the stock was higher and it was like bid 40 cents. So I don't think we'll be doing any shopping per se today. I would imagine the option premiums have come off a little bit here now that the stock's calming down a little bit, but it's definitely something in my wheelhouse. And, I just wanted to show it to you guys, and hats off to Zach. He just keeps plugging away, and we'll make him a millionaire here if he just can stay focused and just rinse and repeat, keep doing the same things over and over and over. Kind of a fun little name we were looking at here this morning in the stock market. Certainly don't, Brian, I don't pound the table, but this was an interesting one. Again, 52-week range. You can see it was as high as $1.75 down to 30-40 cents here. It's interesting that these guys are in the jewelry business, and so I was just curious if Thomas happened to know these guys, and he was like, be careful with these shysters. So, long and short of it here is when we do pull up the fundamentals, it's not a bad idea. Relatively low stock out. There is the CFO has been buying up shares recently. He seems to think that there's some sort of, or he or she, I'm not quite sure, seems to think there's some sort of value here. I guess the question for a guy like me is if I can sneak in here, it's in this 40 cent area. Is it realistic for me to see 70, 80 cents down the road? And of course, when we talk about crypto, it's basically the same conversation. Wicks and tails like to be eaten. Big old wicks up top here. And of course, you can see where the reload zone is up top here. So, this is another one that I'm sort of chewing on. It happened to pop up on my screen this morning. And I'm just going to watch it over the next few days, see how it behaves, and whether it can actually confirm these W's here or not. So a couple ideas for you to chew on in the stock market. Nothing really like, well, I got to get out there and buy everything. I'm a little concerned right now that, I showed you that Dow chart. We're right up at the top of the end of the range. And is there really a great hurry to go out and pile a whole bunch of new money into the market? I don't know. I think if anything, we're probably best just to sort of cool our jets here and, keep hunting your TRI, SOF, stink bids, all that kind of talk. Yeah, I suppose, why don't we transition over to crypto now? And just before I move on, just so you guys are all well aware, I was sitting basically on more than a double on this position. And I just thought, I told you guys about this yesterday and I tweeted it out just so you're aware. Always a good idea to play from a position of strength in the stock market. I basically sold half on a double here. So in essence, they've generated a risk-free trade. It goes on the pile, not even going to look at it going forward. Basically, it's free stock. And, you know, weekly basis, could I see this thing going higher? I think so. You know, there's the chart. And if this was a crypto, you'd probably be like, yeah, it looks like it's going higher. And I'll probably, you know, keep spoon feeding out as we do more and more doubles. But just an FYI for everybody, I did actually take some profits on this guy this morning. All right. Pot stocks looking, actually, no, why don't we leave all this conversation for maybe next week? I don't see any trades to be done here, but pot stocks are looking a little nosebleedy up here. And I wonder too, the more that sort of resonates in the back of my head, I wonder whether the market's moving into this big sort of summit in Vietnam as a bit of a catalyst here. So just keep that in the back of your mind as well. Okay, let's head on over to crypto. You know, the interesting thing, what I like about my approach is it's sort of slow and steady. We've been talking a little bit about this Bitcoin diamond forming. We had, you know, bullish objectives hit, lots of back and forth. And, you know, all the late people to the trade all just got washed. And then the early top callers, they got washed, which is very typical of the market going through a consolidation phase. So basically all the weak hands have been washed out of the market with these two candles. And this creates one of our diamond patterns. And we've seen this repeatedly in the past where this is it's either two scenarios, right? It's either scenario A, this is a midpoint consolidation where we probably should be looking for something up in that neighborhood if this resolves bullishly. Or, right, we actually end up topping out and forming a big ass M here. And that's probably the end of our seasonal rally, and back down we go. I could see, you know, not only on top of the fact that we have big events coming up within the space itself into the end of the month. And Andrew here says the conference in Hawaii is February 27th, 28th. Isn't that the date of Constantinople? I think it's something around there. I put on my chart here 27th.
Yeah, that's right. That's also the ETF approval date.
Okay, so it sounds to me like we got a window here for us to be paying attention for, eh? I do find it interesting how we sort of talked yesterday a little bit about trading ranges being established, and Ethereum just doesn't really want to break down just yet. I think we also talked, you know, like people are like little lower time frame players. If you're really a gunslinger, you got your trading plan rocking off of those, like, say, 15-minute charts, you know, and it's entirely up to you and your plan. This is looks to me like a bit of a playground right now for Ethereum. Top of the range, bottom of the range, you can see beautiful RLV shorts up top. I don't know whether it almost looks like this was a mountain man level. Let's see. Boom. Yep, there's good old Mountain doing his thing. So, you know, real back and forth, and really, I don't think we're going to get a clear sort of direction in this market in particular until we actually start closing below these levels here, or conversely, we close at new highs. So, you know, the irony of it all is for the bigger ones, I don't really have a lot to do. Kind of like Bitcoin. We hit our bullish bot objectives, and now we're just letting the market sort of settle down here a little bit. It'd be interesting. Let's just quickly throw this on, see whether we actually have bot levels. And remember that last bot that set up, it was very cheeky, right? In that it couldn't quite get to 38.2, but it sure consolidated nicely and then broke out. We might get another one of these little cheeky cheeks. Oh, look at that. Isn't that interesting? So 33% is 139.96, and this candle's low was 140.02. So again, very cheeky. You know, I was trading as more of an art form than a science. Do you want to take this consolidation? I know, I like how Grim actually says, well, I'll take bots And you can sort of see the very simple 1 kilo, 2 kilos. Can we consider that a kilo? Nah, that's debatable. But I do like how Grimm's sort of like, well, if I have momentum confirmation in this move, then I can take the trade. But just for our conversation purposes, throw on our bot trade metric. Why do I get the feeling 25% is going to line up somewhere in this area here? Let's see what we got here. Did I do that? And I'm just eyeballing this, so don't hold me to account. Oh, yeah, look. Isn't that incredible how that happens? So, we can always go and take a look at the momentum indicators and see if they're confirming this. We could also Leanne James this out, right? A nice little trend line. Interesting how we have 1, 2, 3 tests of this trend line. That is, if I'm not mistaken, I think we said, oops, how big is that? Yeah, that would have gone on forever. So let's go 300 or so. There we go. Well, maybe let's do a little bit more. 350. So, there is the bot level. And of course, this, like I said, it's totally eyeballed. I'll crisp this up later to give you the exact levels. But if you wanted to play some sort of further push higher here in Ethereum into that Constantinople event, you can see the bot level. It's trying to set itself up here. And I just find this incredible how this, these bot levels line up with market structure levels so well. What do we look like in the internals? Do they look like a train wreck? Let's see. Interesting. So you can see on this dump here, and this is sort of our cautionary bear divs. Be careful. Makes sense why Mr. Bear's hunting shorts up here. In this particular case, she just didn't break. And that's just the way it goes. It's interesting how we actually have a new little bear div trying to come in up top here. I would have liked to have seen a little bit more structure out of these lows, kind of like you see the very well-defined M's on the tops. So I'm going to say that I think the internals need just a little bit more cleaning up here. I also see that everybody seems to be just sort of backing off away from this market right at the moment. So I'm not getting a real clear sort of momentum indication of this trade setup. Maybe we have to wait through the rest of today and then get into the weekend where the kids can take over. But if anything, it's not a bad reference point for you to keep in mind. I'll just throw this in the lounge if and really it's just here's the kick in the pants, right? It's when I was prop crude trading. If the bot levels come in, and if I'm right, and the bot plays itself out, that's $3 a reward. And if I'm wrong, I get just stopped out at $1 loss, right? So MEX didn't get a 30. Yeah, I know this one's awfully close. What is this? This is OKCoin. And that was an awfully big tail there. So I think what you're going to have to do as professional traders is you're just going to have to say, am I comfortable trading this setup? If you're not, then just leave it alone. There's plenty of buses that are coming down the pike down the road. And if anything, what I would suggest you all do is just paper trade this. You don't have to put real money in this. But quite often we see situations where the bot level sets itself up, consecutive higher lows, and the market just chugs its way higher. To hell with momentum. But, that's going to have to be sort of a point at which you get to as a professional in the market that you feel comfortable. And actually, I can even see I didn't draw my bots totally exact here. So, isn't that interesting? If I actually draw it off of this low to this high, that actually does qualify as a 33% hit. So also a great testament to be damn precise with your drawings here. All right. So, I hate to be a boring bulb, but, I have a general rule. This is a bit more advanced dealing with Gann angles and the square and arcs. But I have a general rule that when we're in speed bumps, I'm hands off. I can't really initiate a new trade, just not allowed to. I do like the idea that, and usually when we go through these vertical lines, usually that means we get a bit of a pause in the market as the market slowly slides through these vertical windows. Can you guys see that? You see how we sort of paused and then after the event dump, right? And then paused. And then after the event, we actually had, and see how long it took to get through the speed bump. Once on the other side of the speed bump, all right, now we can rock and roll. So, and then, my conversations there just a few minutes ago about the diamond up here. Hopefully you guys can see, well, to a certain degree, this is almost like the market's on pause as it's going through this speed bump, but a bump. Think of Brian's chin. Ouch. Brian's chin. Ouch. I don't know whether anybody who took the level 2 course understands that joke. If you haven't taken it yet, you're like, what the fuck? So there's Brian's chin just getting destroyed on both sides of the market. It's not a bad idea to let these speed bumps play themselves out. And then hunt your trade on the other side of the speed bump. And frankly speaking, what I'm seeing here is speed bump central. And then, Constantinople, buy the rumor, sell the news. I could see that. And then the final piece to all this, and I don't know, did somebody put it in the lounge? But I think I'll probably leave my commentary off on the big boys with just one final screenshot for you. Where the hell is it? No, maybe we don't have it. I know, Thomas, I thought you put it out earlier. Where is it?
What are you looking for?
There it is. So do we have a reason to consider going long here?
Oh, boy.
Hello. Sort of the piece de resistance. Should we be thinking up or should we be thinking down here? And if anything, as soon as I saw this tweet and I saw guys joking about it, I was like, all right, actually, I can take a deep breath now. I don't have to stress too much. So it's a funny anecdote. There are some people that are saying that their accuracy is up into the 40-50% area. I don't know about that. I mean, only time will tell. But I found it fascinating that these guys came in and they're actually recommending shorting Bitcoin right now. So we'll see how that plays out, but it's kind of a funny anecdote of our crypto experience. And the irony of it all is it's only you guys that are really deep into crypto. You're here every day, right? You're rocking it. That you actually see the humor in that. It's almost funny. Frankly speaking, Colleen, I haven't figured out what their motivation is yet. I really haven't. It would make sense to me that they would want to make money from trading. That would make sense to me. But you never know in this crazy world. There's kind of like what Thomas was trying to explain today. Sometimes there are a lot of moving parts. And, yeah, exactly. So, as Jamie said, I mean, we always have to remember, what is CNBC's number one job? Is CNBC's number one job to actually give you good quality investment advice? No. Sorry. I know you'd like to think that, but that's not their number one job. Their number one job is to sell advertising. Thank you, Andrew. And so, I mean, that's half of the battle here. Is they do what's called sell the sizzle. Have you ever been in a restaurant and the waiter from a table 2 or 3 aside from you brings the food to the table? And have you ever seen a situation where, what is it? It's fajitas or something like that, where everything's sizzling and stuff when the waiter brings the plate to the table and the guy at the other table goes, ooh, what's that? I want that. Ooh, I want that. Right? That's really their number one job, is to sell the sizzle. Yeah. No. Well, my memory of it when Harry met Sally is something about a faked orgasm. Do you remember that scene? That's the one memory I have about when Harry met Sally. I don't remember whether they had dear. I don't know whether Colleen, you just mentioned that. So anyway, silly Brian being stupid. Okay, so why don't we finish off with, and is there anything you wanted to add to all that crypto conversation, Thomas?
Yeah, so CME Bitcoin futures volumes have soared here. So if you bring up a CME contract from February, you can see all of a sudden about, what is this, like 2,600 contracts have gone long. So their argument here is that institutions are entering, and actually they have 18,000 contracts trading on February 19th as opposed to whatever I'm looking at. So maybe I'm just counting this wrong. Oh, that's right. I'm looking at the price. I need to get a better chart. Anyway, so they're showing 18,000 contracts, which you can see from the volume indicator is humongous compared to what we've seen prior. And they're attributing this to institutional entry. Perhaps this has something to do with ETFs. Perhaps there's some insider information about approvals being tossed around. But nonetheless, it's undeniable that there is participation on this contract, which we haven't seen like this for a long time. So that's an interesting indicator in of itself. And I don't know if this might be something interesting for Julian with Thailand greenlighting the trading of blockchain securities. So I guess you don't get tossed in jail for trading blockchain securities, but
well, that's encouraging. And actually, we should give a shout out to Julian. And we try and make this as simple as possible. I thought his comment yesterday, the daily chart is still pointing up. Because of that, I really don't have any justification hunting shorts. And ironically enough, sometimes you can actually summarize what you should be doing in the market really simply. Like, ironically enough, I think he just sort of said it in passing. He didn't realize the significance of the statement. But frankly speaking, I got to agree with him. Now's not the time for us to be aggressively hunting shorts. For those traders, you're trading your trading plan. If the setup comes in, well, you just got to live with the results. But ironically enough, if we zoom out to a higher time frame, I was kind of showing on like the weekly chart, if Bitcoin doesn't shit the bed here, on the weekly chart, we're actually going to start painting bullish divergences on Bitcoin, which you just don't see every day. Thank you for pulling that up. And look at Willie. I mean, is this really the place where we want to be thinking aggressively shorting and driving this thing into the ground? That's just a potion for disaster. So I apologize for interrupting, but I just wanted to give Julian a shout out with regard to that yesterday, because he said it almost in passing, but it was actually a pretty profound statement that he made.
Yeah, I mean, as far as I think you went over the technicals pretty well. And as far as further news, there's really nothing else hitting this market here other than just simply wait for resolution of this range. And I think that's what we're going to see happen over the weekend, because if you look at what happened last weekend, we didn't take off until Saturday, and that was very odd timing for this market. So look for something to happen this weekend just from what happened last weekend is really cool. What I'm thinking.
Piece that Crypto Odyssey just posted in the lounge, sort of to your conversation here. Bitcoin, someone placed 80,000 Bitcoin worth of long contracts on CME on February 22nd. So that, I think, sort of reiterates what you were just saying there a moment ago about the CME contract. And actually, you know what? This would be really cool. And Bobo, we should keep a close eye on this, right? We should see what that Commitments to Traders report does on Tuesday's release. My hunch is you're going to see some really big movement there. So that's kind of cool. Thank you, Crypto Odyssey. I appreciate that post. Good stuff. Good stuff. And then also just to what Thomas was just saying there a moment ago, do we have a rule about dull markets? Is there something that we should not do if we're in a dull, boring market? All right. Thank you, Bobo. All right. All right. Take it easy, Joseph. Nice seeing you. Really, it's dangerous shorting a dull market. And I kind of feel like it just feels like this market almost has, and especially with all the quantitative easing kind of talk, quantitative tightening, what the implications are for that, and liquidity in the market, stock markets moving up, correlation. Does it really make sense for us to get too bearish about crypto right here? I don't know. Now, when we get all these news events, Constantinople is out. This little orgy that Mr. Trump and Mr. North Korea are going to have in Hanoi drug den or whatever. Once that's done, and I'm just being silly, everyone. What do they call those? There's a name for those dens that they have, right, where people go and do like heroin or whatever, opium dens. Are they going to sit and toke on one of those pipes or whatever lying on their backs together? That would be a really funny meme for someone to put together. It feels like this is a dull market right now, and I think it's extremely dangerous for us to get too aggressive on the short side. Now, I'd sort of finish off our conversation earlier. I thought, this is the kind of cool stuff that I think this is, we're supposed to be rational investors, and we want to make rational investment decisions. And a gentleman that I like to follow, he was a principal in the charity coins for a while. Really, really smart guy. He's here in Vancouver. Buddies, of course, with Alex Stirk, and lots of developers. His name's Aaron. And he sort of, thumbs his nose at a lot of the sort of, speculative part of the market. But I thought it was just really interesting this morning. He and his son, and this is how crypto is going to change the world, people. I was really impressed with these people at GeoCoin, and I've liked them ever since day one. We've done very, very well with this GeoCoin. We'll talk about the chart in a moment, but this is great fundamentals where do you guys remember Pokemon Go? I think it was called Pokemon Go. But they created this sort of virtual reality game that sort of overlaid on top of your city or whatever. And if you went to hotspots, you could pick up credits and stuff like that. And it was all the rage there for a year or two ago, and now it's kind of disappeared. But it's interesting that these guys at GeoCoin have created basically that same thing, and they just drop GeoCoins around the world at different locations, and you can go pick them up with your cell phone. So talk about mining crypto, eh? That's kind of a cool angle. And Aaron here, very, very smart sort of fundamentalist in this space, and I would recommend you follow him. He's very, very good guy. He sort of put this out, and I was like, whoa, that's cool. And then we go and look at the price chart, and of course, Brian, being the speculator, can I make money from this? With this sort of new development popping up as good fundamentals, we look at the price chart, and I don't know, do you think that there's any room to make some money on this if a nanny goes and nibbles away? And the really interesting thing about this, and it sort of sucks because I just did this video for the automated level 2 program. Last year, let's see if we can zoom this out. I don't know whether this is the best chart to look at. No, actually it's not bad. But last year, we were sort of sitting there with the market all, and it doesn't matter whether it's Bitcoin or whether it's, Ethereum or whatever. But I was sitting there with like new people coming on the site, new people to the school, and I'd show them these volume profile charts. Really, really good lesson for everybody here. And this is what we call a D, right? You can see prices all the way up here. You can see there's almost no volume on the profile as we go up here. So it creates a big letter D. And the worst part about Ds is that we got to probably come all the way back down to value here to sort of clean itself up. This is where everybody is long this thing. Who's buying when it goes up here, right? Unfortunately, it's not the smart money. And, you know, what I noticed here this morning, which really caught my attention about this, is basically this is this process. And you're done. Quite remarkable, really, when you actually see this play out in reality. You're just like, damn, I can't believe that. You know, you can pull up a Bitcoin chart from 2013, 2014. Here, we'll do it. We'll do it for you. Why not? And actually, we're well past the top of the hour, so we'll just do a quick one here, and then I got to hop because I got class here in about 50 minutes. Okay, where are we here? Crypto. All right, we'll just do like stamp. Same logic. I mean, not really a heck of a lot of change here. And the funny thing is, cycle in, cycle out, nothing really changes. All right, so there is the 2013 face rip bull. And when I showed people this chart, and I said, well, you know, you can see there's not a lot of public participation coming in and buying up here. Where is everybody long? And you draw your D. All right. Colleen, can you see the letter D? Is Colleen still here? Oh, yeah, there she is. And so what that means is that where is value, right? Where is everybody long this thing? And sure enough, you know, keep an eye on this mark, $150. Right? We'll even put a nice little sort of line. And sure enough, the market works its way and comes right back down and tags that level. So, you know, this is a pretty reoccurring theme with volume profile. And what I would just simply say is when we're looking at something like that Geo, now nobody at all is even the slightest bit interested in it, wherever the hell it is. There it is. Nobody's the slightest bit interested in it, but the irony of it all is now is actually when we're in sort of like value. And then, you know, like I said, I see those kind of tweets about how they're building out their platform. They're building out the fundamentals and the shit works. This is basically the future, guys. Now, you know, and then I sort of finished off. Is there any opportunity for us to get a double out of this? I think so. I think the odds are actually pretty good. You know, if I go, we don't have a W in here yet per se. If I want to sort of wait and just let this thing settle down, you know, if anything, you level oneers, you just did the FIBS module, so everybody should understand the significance of reload zones. But in essence, Colleen, can you see how if I was going to be a buyer, this is the area that I'd really like to concentrate in on, right down in this area down in here. And actually really another sort of dovetail of value. I used to work with a prop trader who used to sell moves above value high and just simply buy moves that go below value low. So you can actually see now we're actually starting to get like multiple reasons to consider taking a trade. Reload zone against previous lows, not bad, and below value. So, you know, ideally a scenario I'd love to see it just come down, put in a nice W, and away we go. And that's actually what that little jewelry stock looked like. I don't know whether you guys saw that or not. Basically the same logic. So something for you to add to your watch list. You know, of course, we don't chase here. We're not allowed to chase. So, you know, you just got to be patient. But it's definitely stuff that I think we're far closer to the bottom than we are the top. And actually, I'm just going through the list this morning. Some new names. Look at this one, SYNX. Same sort of thing. You know, I might argue that GeoCoin is sort of at this phase right now, right? And we draw our reload zones, let it work its way down to the bottom, and can you give me a nice pretty W to work with? Where's the W? Where's the W? Where? Oh, hello. Down, up, down, and it's trying to break out as we speak. So, man, this is a shopper's paradise, in my opinion. And, of course, when all these names get bid up again, you know, that's when the public comes in and buys. And, you know, shitcoin tastes great, all that kind of talk. And interestingly enough, too, like for all of you who are relatively new to crypto, you have to understand that we're actually heading into the friendly part of the year for altcoins. So the spring and specifically the summer is usually when they do the best. So should we be hunting for bottoms and W's and stuff in these kind of names? this time of year? Absolutely. So giving you one to sort of put on your radar screen to watch. What do you mean by Schultcoin? Yeah, that's it. That's a whole conversation unto itself. We're polite, so I'm supposed to learn, especially if Thomas and I want to go to YouTube with this show. I have to learn to try and curtail my potty mouth. So we're supposed to be using the term Schult, like shit and altcoin. Put it together, Schultcoin. Thou shalt pump. I like that. Good one. Well, and actually, it was a bit embarrassing. I was meeting with the bureaucrats yesterday, and I was talking to one guy, and he got me talking about trading and all that, and I could feel as soon as I went into trader mode, oh man, my potty mouth started to come out, and I caught myself a couple times. So yeah, it's in Brian's best interest to try and curtail the potty mouth as much as possible. So let's leave off today's broadcast with, this is a shopper's paradise. This is a buyer's market. And really try and apply all the principles that we teach you here in TRI. You know, if you are a Schultcoin shopper, we definitely have trade location now. All of these things are basically, they're just giving them away. Try and hunt for signs of divergence. Try and hunt for signs of W's. Try and use reload zones, because I tell you, like, for a new person to this market, this is an absolute dream market. You guys are actually really lucky. So, okay, I think we'll leave it at that for today. Here's another one to add to your list. I think actually I have a few others that I'm kicking around right at the moment. And I mean, look how quickly these darn things pop. I remember we were talking about GBG just a little while ago. Colleen, can you see how that one that we were just looking at, this could very easily happen to that coin? And of course, you got to have your open orders working to sell halves on doubles, or the things will just go zipping by. So it's just yet another example of what can actually happen here very, very quickly. Hey, and Cave Bear says you banged out a double here. Way to go, dude. Okay, guys, I think I'm going to leave it at that for today. Like I said, I'm heading into class here shortly, so hope you enjoyed the broadcast. Thank you so much, Thomas, for that interesting conversation on the Macro Voices information. You know, if anything, I think we have some catalysts coming up next weekend, so probably for the next week or so, market should be relatively positive. Try and bang out those wins. Always play from a position of strength. And remember what your number one job here at in the market anywhere is to do, right? Make sure that you can come back and play the game again tomorrow. All right, guys, all the best, and bye for now.